Today we're going to talk about one of the most powerful and controversial figures connected to the sports card hobby, Steve Cohen, billionaire hedge fund shark, owner of the New York Mets, and yes, one of the key financial backers behind Collectors, the parent company of PSA. Some people say he brought dirty money into the hobby. Others say he's the best thing that's ever happened to PSA. But I'm going to walk you through the facts and let you decide for yourselves. So who is Steve Cohen? He did not come from the hobby. He didn't grind in card shows. He didn't build PSA, none of that stuff. He built SAC Capital, one of the most aggressive hedge funds Wall Street's ever seen, and it worked. He made billions. He's fast, ruthless trader, razor sharp energy and strategy, and absolute dominance in the markets. So he quickly becomes one of the richest people in America, buys insane art collections, and then, again, he buys the New York Mets. Basically becomes a financial celebrity pretty quickly. And for a while, Wall Street worshipped him. Sort of a modern era Gordon Gekko. We don't have too many of those. But then a bomb dropped. There was an insider trading nuclear bomb that went off in 2013. Cohen's firm, SAC Capital, was hit with one of the biggest insider trading scandals in U.S. history. And it wasn't like a oops accounting error type of situation. This wasn't a slap on the wrist. This was the U.S. government. They said insider trading at SAC wasn't random. It was systemic. They called it substantial, pervasive, and on a scale without precedent. Wow. So SAC Capital pled guilty. They paid $1.8 billion in penalties, which honestly is like, what, one year of earnings? It's crazy. Oh, God. It's just ridiculous. The U.S. government said insider trading at SAC wasn't random. Steve Cohen personally did not get criminally convicted. I want to make sure that was clear here. But the SAC said he did fail to supervise and he ignored red flags. So he got banned for 2 years for managing outside money. If you don't know what that means, a firm like his or any hedge fund, I don't even know if you guys know what a hedge fund is if you're watching this actually, but just think of like if you're day trading stocks, okay, you have a profit and a loss and you're just one person and maybe it's in the thousands, right? A hedge fund is a bunch of very smart, well-capitalized people. They are deploying money any and all areas. It could be anything from PE to stocks to commodities, whatever, and they collect 2 and 10 or whatever the fees are. And they make a ton of money for wealthy individuals, especially foreign wealthy individuals. They make a ton of money for, ever since the laws changed in the mid-2000s, they make a ton of money for different pension funds, like the California pension fund. It's one of the biggest ones, CalPERS, or Texas or Florida or whatever. These pension funds have to keep pace with inflation to pay their retired workers. And so the way they do it is putting a little risk into places like this, and they deploy capital through these mechanisms. So basically, he personally was not allowed to manage outside capital anymore. Couldn't get capital and deploy it. You could become a family office in that scenario. So family office it's like friends and family. You can trade for them, but he cannot get institutional outside money as of this point for 2 years. The story is his empire was found guilty and he avoided prison himself, but the reputation took a massive hit. And that's where the dirty money narrative starts. I want to fast forward to the GameStop war in 2021. Stock market goes nuts. Retail traders versus Wall Street, all the memes. It's like, Robin Hood versus, the evil empire or whatever. And Melvin Capital with somebody else that got slapped on the wrist. He's been on CNBC a lot. I forget his name. That firm was one of the few most aggressively shorting GameStop at the time, and they got wrecked. They were bleeding money on the verge of collapse. Everybody on Reddit's laughing their asses off. And guess who steps in? Steve Cohen, .72. They rebranded. He pumps billions into Melvin to stabilize them and pisses people off even more. And that's where the public perception starts to shift. He started as a cool Gordon Gekko, he gets a ding on his reputation, and now he's helping other people that we don't like because we're part of the 99%, right? So, to some people, Cohen at that point in time looked like the ultimate Wall Street villain, propping up hedge funds, and while regular retail traders just fought this financial revolution, but to others, he looked like a smart strategic operator protecting the financial ecosystem that he is part of and defending investments. But either way, he was willing to deploy massive capital fast when the game was big enough. And that mindset shifted into the hobby in 2021 as well. So how did he get to PSA? Well, In 2020-21, hobby explodes. Cards go mainstream. Billions of dollars start to flow in. Collectors Universe, the parent company of PSA, gets acquired by a group led by Nat Turner with financial backing from D1 Capital and Steve Cohen Private Ventures, his new fund. Now, I got a little bit of grief from Nat because I said he was an ex-PE guy, and I want to clarify that in case Nat is watching. This doesn't mean Nat owned a PE firm and, was taking it over and just trying to build this up for assets or anything like that. He was just, Nat is an angel investor. He made a ton of capital with the Flatiron exit, and he was grouping up with other people that were well funded to deploy that capital into a purchase of PSA. And that's what happens. I think they bought him for it's like 850 million or 895 million. It's under $1 billion, like just under $1 billion. So Nat becomes CEO, still is. I believe Nat owns 10% of Collectors, according to the GameStop board official notice that I saw, but I could be wrong. So he becomes CEO. Cohen is a major financial backer and sits on the board. But is Steve Cohen the majority owner? No, he is not the majority owner of Collectors. He's powerful, he's influential, but PSA is not like Steve Cohen's company. He's just part of this powerhouse ownership group because, no matter how rich you are, if you're going to write a $900 million check, it takes a few people to group together, unless you're Elon Musk and then you just buy Twitter for fun. So you got this powership ownership group. Is the money dirty? Let's be honest and address that head on. We're going to do a little rapid fire here and see what you guys think about the dirtiness of the money. So, is Steve Cohen controversial? Yes. Did his hedge fund plead guilty to insider trading? Yes. Did he personally get convicted of a crime? No. Did he make billions from a firm that admitted wrongdoing? Yes. Is he insanely rich and active in high stakes finance still? Yes. And now he has his hands in our hobby. For some collectors, that's terrifying, and for others, it's reassuring. But here's the truth. Steve Cohen is not in PSA for sentimental reasons. That's Nat. Props to Nat. Again, if Nat's watching this, I'm going to give him props. I am very happy that Nat is the CEO because he's a real collector. He cares. He has probably $25 million in sports cards, and he still rips wax to this day. I hooked him up with a case of unopened, cool upper deck stuff like a few weeks ago. And he bought it, and he's probably going to have fun opening it. I'm very thankful somebody like that is at the head of Collectors, but Steve Cohen is still involved, and people like Steve Cohen do not buy boring companies. He's there because PSA is a financial asset, period, end of story. He's more like the PE guy, even though the best comparison of Steve Cohen is probably Bobby Axelrod, the Billions show in the first couple of seasons. The rest are trash. So people like him, they buy growth, they buy leverage, they buy markets, they believe they can dominate. And what does that mean for us? I wouldn't really panic. It doesn't mean nothing, but the balanced reality is, Steve Cohen brings stability, capital, infrastructure, and influence, and a little bit of a stigma. He brings that's aggressive business mentality of Wall Street style decision making and zero sentimentality, which is why, I could see a future where there's just some sort of acquisition or exit for PSA, not off planet Earth, but to a much bigger company that he shepherds and just makes a ton of money off of. And we get poor financial service and a poor experience because of it. So it's not mom and pop grading anymore. It's like big money Wall Street grading, and get ready because more Wall Street money's coming in. BlackRock's involved already. We got Wondershine Fund, and I've heard through the grapevine we're going to get some memorabilia, fractionalized funds. I'm hearing a lot of stuff, guys. I'm going to stay glued to this. You may want to subscribe because I'm not really good about a rhythm on here yet. It's like every few days. But I'm going to follow the big money Wall Street impact on the hobby because I don't think other people are connected like I am to all the CEOs here and people on Wall Street. Buckle up. It's going to be fun to watch what happens because the future of the hobby is not being shaped with guys at binders at card shows anymore. That is a fact. Thanks, everyone. I'm tired of the comments saying I can't play this thing, so I'm going to name that tune. I might add this to the next few videos.